Hi folks, Chris here. We have an addition to our indicator set. We have an older indicator called Incometrader Bias Volume. It's been now modified and it's called Incometrader Bias Volume 2. So I'm going to show you how that works today and how you can actually use it on a price chart all by itself and make money. It's actually pretty simple, but it's a pretty powerful little technique. I'm very impressed with what I've seen so far. So I'm going to teach you the basics of it and show you which signals are best to take and which ones we could avoid. And the whole idea here is we want to go long, or we want to buy the market when we have the market above both lines. So if we have the market above both of these lines, we have a magenta line indicating a down arrow. We have a blue line indicating an up arrow. Now you recall we've had these little markers on here before from our Incometrader volume indicator, but what we've done is we've added a line from the last magenta one and or the last blue one, the most current one in other words. So that's what we see right here. So if we're going to go long, we want to make sure that we're in an uptrend and we've closed above both lines. So in this case we have a market that's gone up, down, and up. That's a new uptrend right there. And it closed above 48.61. It has to close at least a tick above. So it has to close at least 48.62 or higher. It can't close on the line because that's not a close above. 48.62 or higher. When we see that, we'll put a buy order either on the number itself, 48.61, or one tick above. And I'm going to tell you exactly when to do what. In a brand new trend, a brand new uptrend, now this is key, if we have the blue line below the magenta line, prepare for a big moonshot. The market is going to go higher. If it's going to move at all, this is when it's going to move, versus the other way around, which will be a continuation trade. So this is what's happening here is we're having a market that's moving into it has been in a downtrend. It's actually starting to change trend. So this little combination here with the blue below the magenta is giving you the change of trend. And then we get this new brand new change of trend, we're going to go higher, right? Conversely, if it's the other way around, if we have the blue line, let's say up in here, and we have the magenta one just above it, then we're going to look for the market to be in a downtrend, close below the lower line, the blue line in this case, by at least one tick. In that case, we're going to short the market, and we should have a pretty accelerated move to the downside. So the key is, if we're going to go long, we have to close above both lines in an uptrend. If we want to go short, we have to close below both lines in a downtrend. Now that's the key. So in other words, we're not trading megaphones, we're not trading congestion. We're trading uptrends and downtrends, above or below both lines. In our example right here to the right, we have a potentially strong move to the upside coming because we have the market in an upward trend here. We just had a change of trend right through here, and we've got a close above the upper number at 48.61. And what we're looking for then is, if that blue line is below the magenta line, we are looking for a big move up, because what we're looking for is we're basically going to look for this blue line to cross over. I call this a crossover trade. It's a crossover from the downtrend into an uptrend. So eventually this blue line will be above here, and then the blue line will keep continuing to ride. And those will be continuation trades back to that blue line. This is a crossover. This is the initial changeover of trend, which is going to give you your most powerful move. So this is where you're going to want to do one of two things. One, you're going to want to enter probably about a tick above, because a lot of times if you try to put an order here, if I come up here right now and I put an order here to buy at 48.61, it might hit my order or it might miss it by a tick. And this is the trade. If you want to be filled on any trade, you want to be filled on these crossover trades, because this is the one that's going to potentially run. So you don't want to miss it. So don't get stingy with the little tick. So all right, so here we have our setup. And what we're looking for then is a move to the upside. Let's just go ahead and play this forward. We have to play doing this on market replay. What we're going to do is we're going to use a 5-tick stop. Now you have the option of using if you enter a tick higher, you could go to one more tick. You could use 6 ticks in this case if you wanted to, or you can just leave it at 5. A lot of times it will come down and hit 5 exactly if you go and enter a tick higher, and then you're going to get stopped out. So this is one case where you can bring your stop down one tick if you want to, only on the crossover trade, not the continuation trade. If you enter on the line at 48.61, you leave your stop at 5 ticks. If you enter 1 tick higher, you can bring your stop down 1 tick. And so here we have the market pulling back. We're still in an uptrend. We just went up, we pulled back. We're testing this area support. Now it doesn't matter if this, if we come and close back inside. It doesn't matter at all. You just leave the trade. You don't do anything. Either it hits your stop or it moves higher. So let's see what happens here. You can see it's launching off of that area. And here we get our big move to the upside. Okay, target 1 was just hit. And okay, now I'm going to pause it for a second. Now what you just saw happen, we hit target 1, we haven't hit target 2 yet. Here, we had the blue line that was down here. It just jumped up here, so it crossed over. That's the crossover trade. What we have now going on is a continuation trade. In other words, we're going to now pull back, hit the blue line, bounce up, hopefully, if the market's going, or the trend is going to continue, and then hopefully it'll bounce back. This blue line will come back up here, and we'll look for another hit and bounce back up. Now here's the important thing that I found out. Look for a lot of profit on the crossover, the initial change of trend here with that blue line below. Once the blue line jumps above these continuation trades, just look for about 5 ticks, because you don't know if a trend is going to continue or not. More often than not, in the markets we have today, it's not. So the biggest thing is catch the initial move here, and if you want, you can just avoid the continuation trades, especially in a very, very choppy market, because we often don't get a continuation of a trend. We get a crossover, a change of trend, but it just kind of sits there. Especially on a choppy day, take the crossover trades, the initial change of trend, and then you can avoid these if you want. But let's see how we play this. Now, as far as exit, you can measure the move. Let's do that real quick here. Let's measure the move. I'll pause it to see where we might go. And so we'll take our little change of trend here. We had a move from here to here. Okay, where's target 1? Here's target 2. You can either measure the trend, or when you get your close of your first red candle, we got green, 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 green. When that closes red for the first time, you can trail your stop. So let's see, we got about 43 seconds here to see what happens here. Looks like it's going to pull back here quite a bit. So what I can do, that candle closed down, and I can trail my stop if I like to, from here, maybe to the base of there, 1 tick lower, it doesn't matter, wherever you want to get out, or just, if you're happy with your profit here, I think I'll just put it right there on target 1. Because I'm looking for a re-entry now as we pull back to 48.65 as a continuation trade. All right, so I got out on my second target right there, target 1. So now what I'm doing is I'm still in an upward trend, right? I've got my pullback here to the line. I'm going to look to buy, because it's a continuation trade, I'm not going to buy a tick in front. I'm going to buy right on the number itself at 48.65. Crossover trade, better to enter a tick in front, because you want to make sure you get filled. You do not want to miss that move. That's a big move. Don't get stingy with 1 tick and then miss out on 20 ticks or more. Now we have our continuation trade coming up, and this is a 1-to-1 ratio. You're going to risk 5 ticks to make 5 ticks. That's it. You're not looking for more than that. It might go more, but very rarely will it happen. And if it does, then you'll just pick up the next continuation trade. All right, now what am I going to do? I'm going to cancel the order. Why? This one was down here, moved above the blue line. What is this? This is another crossover trade to the downside. There we're setting up for a short here. This is what you do not want to be going long here, because this is telling you, hey, this is a perfect scenario to get ready to sell the market. So what you want to do, now that we're in between, we're not above, are we? We're not above both lines, so we're not buying. We're in between. So what am I going to do? I'm going to close out the trade, and I'm going to get ready to short the market now. In order to short the market, I have to close below both lines, and by at least a tick, so that's 65, I have to close at 64 or lower, and I have to be in a downtrend. This is a perfect scenario for a crossover to go short. So I'm looking for what? An entry at 64 or lower, 1 tick beyond, and I'm looking for a runner. Here's my change of trend. If we come down, we just bounced up. If we come down from here and close below, I've got my change of trend, and I'm going to go ahead and freeze the screen for a second so I can draw the move or measure the move and get the order ready, and then talk about what's setting up here. So at this point we are in congestion, or we're still in an uptrend, but until we just turn down. This is still move higher. Now we're in congestion. Okay, now we just closed right here. So what I'm going to do is, I can see my downtrend, correct? Here's my little move down, up, down, and I close at least a tick below. So I've got that. Where am I going to put my sell order? If it's a crossover trade, the magenta above the blue, you can put it here, but you might miss the trade. Now, if the order is right there, you want to get filled there, fine. But I'm going to put it a tick below because I want to get in on this trade. I'm also going to measure the move too. And you have plenty of time to do this because this is a 1 minute chart. And I just froze it so I could explain what's going on. All right, so here we go. I'm filled. Now I can move my stop if I want to 6 on this trade only on the crossover, because I entered a tick beyond where I normally would. And if you're wrong, then it stops out. Man, big deal. Let's just see what happens here. Okay, so we're breaking down. There's target 1. All right, now what happened here is we just crossed over. That magenta line was up here, crossed down here. So we're getting up, we're getting ready for a pullback for a continuation down. So I might want to either bring my targets maybe up to target 2 here, maybe a tick in front, or just wait until we get our first up close. It doesn't matter. I'm already up 200 here. And so let's see what happens. Okay, hit my target once, twice. Okay, got filled. All right, so what am I doing now? Now we're out of the first trade. And again, we could still be holding it if we want to and just wait for the first close of a green candle and then exit. Now I'm going to look for a short at 48.61. Now, because this is a continuation trade, every time we go lower, we're going to keep printing this magenta line. Go lower, we'll print another one, magenta, lower, another magenta. We're only looking for 5 ticks. Not looking for a lot here. So let's see what happens here. We come back up. Either we'll get filled and it will do what? Come down, or it will get filled and stop us out. It's a 1-to-1 ratio. Just testing target 2. Now there's your up green candle, right? So if you wanted to, what could you do? Instead of taking your target there, you could have just put your stop right above here and let it trail just in case it goes lower, which it looks like it is. So you could actually make a little bit more here. So that's another option too, like I was talking about. See, look at that run. We got out here, and now if we had initially put our stop just maybe a tick above that, we'd still be in this trade. Now that's a big hammer. That's a big reversal signal. So you know it's gonna reverse here. If I saw that, I would just get out here at target 3. Now this is an open order here, so I'm gonna now put it here. What's gonna happen likely is this is gonna fail, but I want to show you how to recognize what happened here when it failed and what you should do here. But we do have another continuation trade. Now this trend started way back here. So it's a pretty long trend. It's probably ready for a reversal, right? So chances of this working out, probably not that great. But let's just see what happens. So you don't have to, I'm telling you, you don't have to take it. You do not have to take continuation trades. Maybe the first one, but maybe the second or third one, no. Because the longer that trend goes, the more likely it's that continuation trade will fail. In this case, since my stops are set differently, I'm going to freeze it. I'm going to adjust everything for a 1-to-1 ratio. I've got my targets here. I'm only looking for 5, right? From 50 to 45. And my stop is at 5. So it's a 1-to-1 ratio. If it comes down and I get that, great. I'm not looking for any more than 5. And if it comes up and hits that, that's okay. Not going to hurt me. The reason I chose 5 is because I've noted a lot of times that the market will bounce 5 ticks before reversing. Sometimes 4. So we got that profit, but now you see it came down, gave us the 5, and now it's starting to change. If it comes up here, that's a new change of trend, right? So I've got to change the trend coming up here. Speeding things up here just a bit. So it went down a little lower. So there's a new uptrend. What am I waiting for now? I'm waiting for the market to either go back into a downtrend and then the line has to move. You only play the line one time. You don't play it multiple times. So we don't short here again. Or I'm waiting for a crossover. I'm waiting for the blue line to be below the magenta. I'm waiting to see what happens next, basically. But right now I'm in an uptrend, so I'm expecting to buy. I'll speed things up again. Okay, now what happened? Both lines dropped down here, or actually the blue line dropped down here. This is a perfect scenario for a crossover trade. We have the blue below the magenta. We're in an upward trend. So we have the market come up like this, pull back, go up, down. And so we've got some consolidation there. So let's draw the consolidation. We have it right here. That's a lower high and to a lower low. And so as soon as it took out the high right here, that's a new uptrend. And then it pulled back, went higher, pulled back, higher, low, and so we're still in an upward trend. So what happened here? We just closed above 48.50. Now I probably am going to miss this trade because I paused it a little bit late. But let's just see what we would do. I would get ready now to buy. If it's a new crossover, I don't buy here at 48.50. I buy one tick above 48.51. So hopefully it pulls back and fills us before this blue line crosses over and has a big run here. All right, so the rule for the crossover trade, uptrend, close above both lines by at least a tick. So it's 50, you have to close at 51 or higher. On the crossover trade, you'll buy a tick above. You can increase your stop by one more tick, so it's a 6-tick stop if necessary. And then you hold it because you're looking for a runner. So maybe we'll get a fill here, hopefully. We're going to miss it. So if we had an order at 48.51, there's no way we would get filled at all. Now, if we were quick, we might have got filled here, but that's just where I froze it. So I thought I'd start there. This is going to be a runner, potentially. If it's going to run, it's going to run these crossovers. So I'm holding for a long. Okay, pause. Now what happened? Now I missed this one too, just because I paused it late, but I would have got this in reality. So we didn't get that one, missed it. Maybe if you're fast, you would have got it. Then we have our continuation trade here, right here. So what do? Because it is a continuation trade, we put it right on the line, and we're only looking for 5 ticks. So already hit. This one you would have had plenty of time because that closed. That's 1 minute, and that's working on the second minute. So you had over a minute to get into this trade after you saw it close up. Would have been easy to get, and you've already had your profit, 57 up to 63. You already have your 5 ticks. That was a winner. This was a winner too if you could have gotten filled. Now I'm going to close that out because I didn't get filled, and we'll see what our next setup might be here. All right, so it came all the way. Now look what happened here. It pulled all the way back. If you try to get in on the second hit, you would have been stopped out. Always only on the first hit. You never look for an entry on the second hit, and you never play the line twice. So here's another entry right here. It just hit again. Again, I had this really, really fast, so I didn't get a chance to put the order in. 63, I'm only looking for 5. 68 right there. Pulled back 63. Went all the way to 71. So you easily got your 5 ticks. So you got a big run here. 5 ticks here. Another 5 ticks here. This is a nice kind of a trending day on crude. This is crude oil. On a choppy market, though, you wouldn't be taking these trades. You wouldn't take the continuation, these blue ones here. Just take the crossover. You get a nice little run like that for 10 or 20 ticks. Okay, good. Take the other one, crossover from the other side, 10 or 20 ticks. Great. You're basically done. Now, we don't play that second hit when we come back, right? Now, this line moved lower. Now, it didn't give you a chance to enter whatsoever, so you just don't even worry about that one. Didn't pull back at all. And I'm playing this quickly, so it doesn't normally move this quick. And this, you could say, okay, this is the first hit. If it's gone that far away, you want to get filled before it has the big move. And since we're only looking for 5 ticks off of the blue here, it's already gone, at least that. We're not worried about this, trying to get filled here on this one. Now, hopefully we'll get a crossover and get a short here. We'll see. And we just, all right, what do we have here? This is a crossover. We have the magenta above the blue. So we're looking for a runner as long as we're in a downtrend. Are we in a downtrend? Yes, we are. We have a move up, down, down. So we're in a downtrend. So let's mark the consolidation. Make sure that we actually have broken out of that area. We closed, that's our downtrend right there, pulled up and down. So what I'm looking for is a close. Now there's a target area right there. Do I want to go short on top of that target? Let's see. I'm going to mechanically take it, but I bet you we're going to bounce. I mean, there's a potential to bounce right there. we'll see. So what I'm going to do is we're going to close below here in 3 seconds, and I'm going to put an order to short at, actually I better play that first to make sure we do close. 2, 1, 0. Okay, we did close below. Now we might bounce off of this target area, but I'll go ahead and put this in. Because it's a crossover trade, what do? One tick below 60 is 59. So I'm going to go short here, and I'm hopefully we'll break through here and go lower. We may not, because that's our target. Now I can, if I want to, I can increase this by 1 tick. Let's just see. There's a lesson in here. I want you to see this. Oh, I got stopped out. I kind of knew that was going to happen because we hit that, right? So I don't have to take that trade, that crossover, if I'm already on the target. But what do I have here? I've got another crossover to the upside, don't I? As soon as this in 14 seconds closes above here, I've got to buy at that's 68. I've got to buy at 69, 1 tick above, don't I? So I got stopped out on that crossover with on 6 ticks. Let's see if I can get this one right here. This is a very important lesson. So I'm looking for a pullback here. There's 68. I'm going to see if I can get a fill at 69 here. And remember, what do I have to have in order to take the trade? I have to close above both lines. I have to be in an uptrend. Am I in an uptrend? Yes. There's my change of trend right there. So we went down. And actually, you can take the change of trend right here. That's just a continuation. Change of trend, up, up, up. Now this target 2. Let's see what happens here. Let's see if we get a pullback. I'm not going to get a fill. I was going to get a fill in this one. Happened so quickly I wasn't able to get my fill here. But that one didn't work, and this one, because I wanted to go higher. And this one we just did not get our fill. And we'll, all right, there's my fill right there. Look at that. It did pull back, fill. And what happened after that? Let's see if it makes a new high here. Alright, so it did come back and fill me on the first hit. And at 69, went all the way up to 79. So it gave you that's a $200 move very, very quickly there. So it actually worked. And it's still working. It's still moving higher. That's a really strong trade. So these lines are very, very powerful. Very simple. They work on, the lines are generated off of 3 things: trend, support, resistance, and momentum. When you see that little dot there, it represents trend, support, resistance, and momentum on that candle. Blue arrow with the up green candle. It's telling you that this is a very bullish trend. This is very bearish. And so we got our crossover here now. And you notice I didn't get a new little blue dot, did I? Or a blue circle with an arrow. You don't need that. It's the lines you're looking at. So here we got a big move to the upside. So that's basically how we use this strategy. And like I said, it's a strategy. I just showed you several trades that you can trade with only price and that indicator, the Incometrader Volume V2 version. So it's an upgrade to our older volume indicators. I will send out the new indicator to you guys with this chart template and the newest chart template that I'm using in class. Hope you enjoy it. Good luck and good trading.